eToro has garnered a lot of attention as a leading social trading platform, but it's not without its pitfalls. Whether you're a seasoned trader or a newbie, there are several reasons you might want to think twice before diving in. Let's explore some of the key concerns surrounding eToro. High fees. Imagine making a successful trade only to find a chunk of your profits eaten away by fees. eToro is notorious for its high fees on withdrawals, overnight leverage positions, and even spreads that can be wider than those of its competitors. For frequent traders, these costs can add up quickly, eroding potential gains. Withdrawal woes. One of the most frustrating experiences for any trader is having trouble accessing their own money. Many eToro users have reported delays and unexpected fees when trying to withdraw their funds. When your money is on the line, easy and quick access is crucial. Complex fee structure. Navigating eToro's fee structure can feel like solving a complex puzzle. With various charges hidden in the fine print, understanding the true cost of trading on the platform can be daunting. This lack of transparency can leave traders feeling blindsided by unexpected costs. Limited asset selection. While eToro offers a diverse range of assets, it still falls short compared to specialized trading platforms. If you're looking for a broader selection of financial instruments, eToro's limited offerings might leave you wanting more. Customer support. In the fast-paced world of trading, reliable customer support is essential. Unfortunately, eToro's customer service has been criticized for long wait times and unhelpful responses. When issues arise, you need quick and effective support, not a frustrating waiting game. Regulatory concerns. eToro is regulated by several financial authorities, but its regulatory standing can vary by country. This disparity might affect the level of protection and recourse available to you, raising concerns about the platform's reliability in your specific region. Platform stability. Technical issues can be a trader's worst nightmare. Reports of slow performance, outages, and glitches on eToro's platform are troubling. These problems are particularly concerning during periods of high market volatility, where every second counts. Copy trading risks. eToro's social trading feature lets you copy the trades of experienced traders. While this sounds appealing, it comes with significant risks. If the trader you're copying makes poor decisions, you could suffer substantial losses. Remember, past performance is not always indicative of future results. Limited educational resources. For beginners, having access to comprehensive educational resources is key. eToro's offerings in this area are relatively sparse compared to other platforms, potentially leaving new traders without the tools they need to succeed. Aggressive marketing. eToro's aggressive marketing tactics can create unrealistic expectations about trading's ease and profitability. It's important to approach with a clear understanding of the risks involved, rather than being swayed by glossy ads and big promises. In conclusion, while eToro has its merits, these concerns are significant and should not be overlooked. High fees, withdrawal issues, complex fee structures, and limited customer support are just a few of the reasons why eToro might not be the best fit for every trader. Before you commit, weigh these factors carefully against your trading needs and risk tolerance. Trading is a serious endeavor, and choosing the right platform is crucial for your financial success. Be informed, stay vigilant, and make the choice that best suits your goals and circumstances.